Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about STEM and their most recent investor presentation, which came out on March 15th. One of the reasons why I want to cover this is going to be covering the fact that we had a large upswing over the past 3 days. You can see the Friday price movement was up nearly 10%, but also I want to walk through some of that investor presentation. So just to talk about kind of where we are from a charting perspective, you can see that the stock had a very huge rebound coming off of the investor presentation, as well as we saw a big buy come through from an insider trader. One of the directors at STEM purchased $150,000 or 150,000 shares at $7.41. So nearly catching the bottom. The low on that day was $7.26. So excellent return on investment on those shares so far. And you can see that there was quite a bit of attractive buying in under $8 a share. So the company has had a very strong past week. However, we're still down significantly on the year, or if you want to look on a longer time horizon, last year, the majority of the year, I would say we were evaluating the stock post-acquisition or post after they had combined with Star Peak Energy, kind of in this $20 to $25 range. And since then, they have gone on a significant decline, especially following a subpar earnings where they had a pretty large revenue miss due to pushing some key projects into 2022. So let's talk about what this means for the company going forward. And I want to highlight some of the things that I think are going to be pertinent for us to watch over the course of 2022. So what I'm showcasing here on the screen is the STEM investor presentation from March 15, 2022. I will link this down in the description down below because this is a ton of really good information and it addresses a significant amount of the concerns that I had in the Q1 earnings report. So what I'm showcasing here is going to be their presentation. I am just providing my opinion on it. I am by no means a financial professional. I'm just some guy on YouTube. So do not construe any of this as investment advice. So as we go through here, I'm just going to go straight to some of the items that I want to focus on. So when they talk about the fourth quarter results, it was a very strong year overall, strong Q4 in terms of year-over-year growth. But keep in mind, this was somewhere around the means of a 20% miss on revenue. However, I do want to highlight that we saw a large capital raise in the form of $460 million, and that was done at a green convertible note of 50 basis points or 0.5% on the interest rate. So they brought a lot of cash on at a very low rate, which is a great way to leverage some of that debt. And I also want to highlight that they currently have nearly $500,000 in contracted backlog. So these are people who have already signed and they are saying, please give us the service that we have requested. This is super important because oftentimes you can see that people talk about the idea of revenue versus bookings. Bookings is not a reserve. This is not something that people are saying, hey, we're interested in, such as pipeline there to the right-hand side. This is people have already put pen to paper and said, we want these services. So this covers the entirety of the 2022 plan and then some. So the expectation is that they will continue to grow significantly over the course of this calendar year. The other thing that I would highlight, and this goes into a lot more depth and presents the information quite nicely compared to what I've seen, this is the Available Power project win, and this is supposed to be in tandem with or tied to the ERCOT market, which is essentially the entirety of Texas is going to be tied directly to this, and this is going to be a huge deal for them. So you can see that this is going to be primarily commissioned over 2023. However, the expectation is that this is going to be more than $500 million in revenue. The nice thing associated with this is it's going to include 20-year contracts associated with the company over the course of the next few years. So this is going to showcase some of that recurring revenue that builds into the platform. Now, one of the things that I expect to be a concern associated with this deal is how quickly are they going to be able to deliver on this. However, what I will follow up on this with is because they are going to be tied into the energy grid for nearly the entire state at different sites, over 100, then the expectation is this sets them up very well to tie in directly with a lot of commercial projects across the state of Texas, including warehouses, including some of the big players that they already have relationships with, such as Walmart and Amazon. So this is huge, and this deal is not going to go away due to the tie-in with that government entity, whereas in the commercial space, obviously those companies can go away. So it goes on to talk about the Also Energy. I've covered that in a number of prior videos, so feel free to check those out as well. But that is for another time, and it talks about how they tie in. One of the things that I think is going to be more important than that is going to be talking about the management of the supply chain. Because the company is going to be producing or delivering on the build of a number of projects that are primarily going to be hardware installations, the higher that those hardware costs goes, the less that they are going to be able to walk away with in terms of total profit. The nice thing here is because they are purchasing a lot of those batteries from other companies such as Tesla, such as LG, then the capability that they have here is to continue to purchase those in bulk and lock in some of those supplies. And they are showcasing that while this has gotten more expensive, they don't expect it to affect the overall relationship, and they're expecting increasing supply throughout this calendar year. Admittedly, I imagine this presentation was created prior to and probably not adjusted in line with some of the hostilities that we've seen in Eastern Europe over the course of the past month. As such, I would still be hesitant to go all in associated with the values that you see here. Now, it's important to note that as the company continues to grow, they are highlighting some of the projects that they are focusing on here, especially front of the meter and behind the meter type of projects. So this is really showcasing some of the diversity in terms of where they're getting their revenue and how they continue to grow across the energy storage market. So this is a huge deal. How does this play out? Well, it's important to note that the company is changing how they are growing in terms of they are shifting heavily from this front of the meter focus with a still very material portion of behind the meter to nearly exclusively front of the meter. And that's just due to the fact of the jobs that are coming in. This may be how they are transitioning or what deals have been closed, but all in all, the point is that money's coming in. Now, the nice thing is that this is by and large locking in these 20-year contracts, and the overall contract value, again, this is made by the company to look good, so this does look very good, but the total contract value is higher, obviously associated with the larger contracts and longer contract terms. Now, what I would highlight is this is coming with a longer project cycle, which means that this could put negative or downward pressure on near-term revenues in alignment or associated with the original expectations. So the expectation here is that we're going to see a much larger component of this be software revenue as opposed to the hardware revenue, which is great. However, we're going to miss out on some of that immediate revenue growth from a profitability standpoint or from a numbers standpoint. And the question that I'm going to have here, and I'll leave this on the contracted annual recurring revenue piece, is they're really highlighting this massive growth and profitability and the components associated with this. But one of my concerns is that overall the company continues to showcase there's going to be this huge growth and profitability. However, they are still not showcasing that we're going to hit profitability until maybe 2023. If they don't hit profitability in 2023 after going through all this process, then I have major concerns, despite the fact that my investing horizon is 2025, because again, the story is continuing to change and we're not seeing half of that story change. So it's going to be very important that we see very high gross margins associated with this line of business, especially if they're investing heavily in building out this line of business. And you can see kind of what this looks like when we talk about investing in growth and profitability. So they're expected or continuing to grow in the space, especially associated with fleet EVs and front of meter projects, both of which are supposed to be here today and have a significant amount of capability. However, we're not seeing that necessarily translate into additional profitability. Now you'll see here that we talk about Athena for fleet EV charging. This is all in theory, although they are going to be pushing this for Penske and NG, and I'll be interested to see how this develops into a new product line, but right now it's still in the theory phase, although we do have some key strategic customers that they're going to be working with. If this does take off, then obviously as we go forward, the expectation that as more of the United States develops the infrastructure to support mass EV charging, then Athena could be a front runner to be in that space, which would be super exciting. Now, obviously they would be competing with other EV providers such as a Tesla and their battery storage and their approach, and I believe their software is the Auto Bidder software. But if Athena was able to partner with someone like a Ford or a VW or some of these other large players, I think that that could still be huge for them in terms of automating and developing how they can appropriately utilize that energy going forward. Now let's focus on the 2022 guidance. One of the key things that are different here is that we've seen that smaller revenue component in Q1 2022, which again, this was very similar to the actual results that we saw in Q1 of 2021. But it's important to also note that the adjusted EBITDA over the course of the entire year was originally expected to be negative 25 million, and now they've produced a very large range. Now, one of the things that they've said associated with the range here, as well as the range of their revenue, is that this is both going to be largely dependent on what projects get completed this year. Due to the labor force that they have available to them, they still have to be picky, or they have to pick and choose what projects that they are going to be completing. Now, we saw 3 large projects, or it was stated to us as investors that 3 large projects are going to be coming through in 2022 Q1. So what I'm going to be looking for is this number going to be hit? Now, I think that 7.5% should be relatively simple for them, especially when you're looking at some of these larger numbers, and I hope that they're not kidding themselves with the 55% of total revenue in Q4. Last year, they did do a slight beat on the first 3 quarters of the year before a large miss on Q4. So I would love to see them make up some of that ground, not just from last year, but also for big numbers associated with this calendar year. And the other thing that I want to see is make sure that they are able to continue to grow in a profitable manner and really targeting profitability, because if not, then I wouldn't be surprised if we were going to see another capital raise. So that's going to be the number one thing I'm focusing on during any earnings reports this calendar year is, are they going to be completing projects? Because that will directly feed onto, are they going to hit these revenue numbers, and are they going to hit this adjusted EBITDA? The other thing that I'm going to be looking at, and that's not going to be in the investor presentation, but is going to be those insider buying and selling. It is refreshing to see someone put in a material amount of money to be able to purchase additional shares of the company, and I would like to see some of the other players do so as well. So some of the key takeaways associated with this is going to be, again, strong growth, both on the revenue and booking side. They're looking to expand their Athena platform, not only in Texas, but also in the entirety of the Western Hemisphere, and they're continuing to grow into these other product lines. There are a number of items available in the appendix that, again, you can view should you want to, but we covered a lot of this information in the last video, so I'm just going to scroll through here if you would like to pause and look at any of the information. All in all, I think that the company continues to perform very, very well. I continue to be a bi-weekly buyer, so every 2 weeks I am continuing to add to the stock position. This is one of my holdings for 2025, and I'm going to continue purchasing unless and if I provide an update as to whether I am not going to be purchasing. It'll be done here on the channel as well as in the Discord, which is linked in the description down below. So if you find this content helpful, please leave a like and subscribe. Thanks for watching if you're still here, and I'll talk to you later. Bye.